Good morning, everyone. Looks like we are ready to start this morning's informational workshop. My name is Sharice Chester with Creativision Media. First, I want to thank you all for making yourselves available for this informational workshop that is being held by Lego Construction in partnership with the School District of Palm Beach County. And I must say, as a compliance consultant for many years, I think this workshop is very unique and much needed in the compliance and construction community. So we want to commend Lego and the school district for the vision of putting this on this morning. Before we start, we're going to have greetings from Ms. Maricel De Leon, who is a specialist in training and events and outreach for the district. And then we're going to go right to the team at Lego Construction. So I'll be sure to mute you if I hear background noise. And while we are waiting for Ms. De Leon to give greetings, please don't forget to add your information in the chat. Ms. Maricel, good morning.
Good morning, everyone, and welcome to Bonding and Insurance Informational Workshop. I am so excited to see all of you for this type of training. And today we're going to learn more about how to apply bonding and insurance, and it will be an informational and beneficial, I am sure of that, for all of you today. So welcome on behalf of Vicki, Sykes. I would like to welcome everyone, and I hope that you enjoy this training. Thank you.
Thank you so much, Ms. Maricel. And Ms. Vicki Sykes, she is the Director of Diversity in Business Practices at the school district. And of course, you'll be hearing from her later on. Before we get started, just a few housekeeping rules. Remember to keep your mic on mute when you're not speaking. However, when you're ready to speak, it's easy to unmute or hit the space bar to speak. If you are joining us by phone, you can mute and unmute by dialing 4 and then the pound sign. And a friendly reminder, in the chat box, type your name, your company name, your title, and your email address, so we'll know everyone that's represented here this morning. And we ask everyone to please jot down your questions. After this presentation, we will open the floor for all questions and comments. Trust me, you're going to enjoy this discussion. And also, we will share this presentation after the meeting. So you'll have an opportunity to take a moment to review it after today's discussion. So at this time, we're going to turn it over to the Lego construction team. I have Mr. Nathan Posani. He is an estimator at Lego Construction. I also see the project manager, Mr. Jarrell Rodriguez, on the Zoom as well. So Nathan, please.
Yes, Cheris. Thank you. Thanks everyone for attending the meeting today. Good morning. So moving on, today's informational session about bonding and insurance will be covering these topics which you see in the screen, mostly between what's a bonding and insurance and how it differs from each other, and providing tips for identifying a bonding and insurance agent for yourself and your firm, and describe the process for applying for bonding and insurance. And it has, I know for a starter, it will be like a lot of informational things, but putting up front, you need to identify the forms, you need to identify the details, what you are trying to achieve, and give it to the bonding and insurance agent in order to be in a better position. So that's what we are going to achieve it through this meeting, and explain the role of a bonding agent in growing your business, and discuss the process for appealing any unfavorable decisions. So moving forward, before we get into the actual part, we just want to give a small recap about Lego and what kind of projects we do to our future partners who are present in this meeting. So about Lego Construction Company, it was founded in 2006. We are certified GCs and a certified small business with the state of Florida. And we operate mostly in South Florida, moving our operations to Central Florida and North as well. We specialize in the following areas: design build, general contracting, CM at risk, which we predominantly operate with the Palm Beach School District, and pre-construction activities as well. So whenever it comes to Lego, our repeated clients tells our performance, quality, and a good work ethic, a lot of which is influenced by our partners and subcontractors, and we wish to achieve the same from our future partners present here. Our markets include healthcare, education, federal, and historical. So industries and clients. Sorry. Okay. So we work predominantly in three different sections: education, healthcare, and federal. Education, we are concentrated towards all the school districts in South Florida, Palm Beach, Miami-Dade, and Broward, and we do business with Orange County and Lee County as well. When it comes to healthcare, we operate in Jackson Health Systems, Baptist Health, Broward Health, and Mount Sinai. Federal, we operate with U.S. Army Corps, U.S. Air Force, U.S. Coast Guard, and U.S. Department of Homeland Security. And we also have a varied portfolio in aviation, seaport, public housing, correctional, recreational activities, and historic preservation. So since most of the subcontractors present here are new to Lego and Lego process, we would like to take time to explain them how the bidding process works and how they can achieve business with Lego in a short span. So typically it is segregated into 5 different steps. The first step being to get pre-qualified with Lego. So the subcontractors who are pre-qualified with Lego are only allowed to submit bids with Lego for Palm Beach School District projects or any CMs that you operate with Lego. Because whenever we are trying to do business with a new venture, like new partner, we'd like to tend to have their past historical qualifications, their background, their experience, so that the relationship will get on to a smooth beginning. So that's why we intend to go on to get pre-qualified. So the second step will be having the 100% drawings to be rolled out to the pre-qualified subs who are interested in bidding for the job, and doing the site visit on all the bid due process. Then we ask the subcontractors to submit the seal bid on a particular date and time, and or before that. So the step 3 will be the conducting the site visit, as I mentioned, and step 4 will be on due date. All the Lego proposals will be due at Lego's office or the mentioned address. Usually it is for South Florida operations, it's South Florida, so Palm Beach. Yes, you have to submit in our office the seal bid on particular date and time as mentioned in the advertisement. We also roll out bidding advertisements in Palm Beach Post and as well as other public platforms. So step 5 will be the project is then awarded to the contractor who's lowest as well as responsible bidder. So being lowest tends to include all the scope and all the activities that we wish to include in your proposal, and then being the lowest and being the responsible and reasonable bidder. So that's what we really look into before selecting a bidder to be able to put forth their shoes on the work site. So moving on, we would like to inform the subcontractors about the future Palm Beach School District projects which Lego has acquired and are in design phases. So Crystal Lake and Elementary School design phase 50% is completed. The budget is supposed to be around 4.8 million, and we have all the trades that are listed here, especially starting with selective demolition, selective paving and striping, and all the gutters and downspout activities and structure walkway covers, doors, windows, and we have Division 9 activities and as well as specialities and MEP activities. So moving on to the next slide, it's Points and Elementary School. The budget is estimated around 4.6 million. It's pretty much on the same contract with Crystal Lakes. Both of them are supposed to be out for bidding. Crystal Lakes and Points are supposed to be out for bidding by April 1st week. So we request the subcontractors present here to get pre-qualified with us and be able to bid on these 2 projects for a good starter with Lego. So moving on, we have Golden Roof later this summer, which is expected to come out for bidding. And moving on, we have Pahokee Middle School, estimated around 8 million, which is expected around November 2022. And we have all the trades that are present here that are supposed to be included in the scope of work. So thanks for the quick note. Thanks for joining us, everyone. And moving on, I would like to give the floor to Mr. Sean A. Burton, certified insurance counselor and as well as surety bond specialist with Nielsen and Hoover Associates. Mr. Sean and team has been working closely and supporting Lego for so long time. I think for almost a decade, and have been in a good relationship with us and have been able to guide us for a long time. Thank you so much, Mr. Sean, for able to join us with us today and addressing the crowd. The floor is yours. Thank you.
Thank you, Niyanthan. How is everybody doing out there? Good morning. Can you see me? Can you hear me?
Yes, we can.
Excellent. I want to thank everyone for tuning in. I can hear the thunderous applause out there. I know you're all excited about learning about bonds and insurance this morning. I'm sure you had trouble sleeping last night knowing just how much valuable information you were going to pick up today. So I want to thank you guys for tuning in, and we can talk about bonding and insurance today. My name is Sean Burton. I work with Nielsen Hoover Associates in Miami Lakes, Florida. We are surety bond specialists. We specialize in providing bid bonds and performance and payment bonds for all types of contractors. And I've been writing bonds and insurance for contractors since 1995. And I've been working with Lego managing their bond program and their insurance program since around 2010. And it's been a real pleasure to be a part of the Lego team. I can tell you Lego Construction is a very polished group. Luis Garcia has demonstrated incredible leadership and has built a great team and a great company. And they've shown a fantastic track record with both their insurance program and their bonding program and their success with the school board. So today, we're going to start off by talking about what a bond is, what a performance and payment bond does, how it protects the taxpayers, and what a contractor has to do to qualify for surety credit. And then after, we'll talk about the insurance side, the general liability and work comp, because they're a little bit separate animals. But first, what is a bid bond and what is a performance and payment bond? If you're going to work for the school board and or a general contractor, and sooner or later, once your contract amount hits a certain level, they're going to start asking you for a bond. And if you're a subcontractor, if you're a roofer, a plumber, electrician, drywaller, underground utility, you name it, at some point, someone's going to ask you for a bond, and that's where we come in, okay? Now, if a contractor presents a bid bond to the county school board, what the bid bond is just a piece of paper with a power of attorney attached to it. It says if the contractor is a successful bidder, then they've already been pre-qualified for the performance and payment bond. Okay, so the bid bond is just a precursor to the performance and payment bond. Once the contractor bids the job, successful bidder, and been awarded the contract, that's when the contract will have to deliver the performance and payment bond. What the performance bond guarantees to the school board or the general contractor, whoever the subcontractor may be working for, guarantees that that subcontractor will get the work done on time, will perform the work as per the spec of the contract, and the payment bond guarantees the subcontractor will pay their any subs and suppliers downstream. And in addition, the performance bond will provide a 1-year warranty for workmanship. Once the scope of work is complete, once the subcontractor puts the infrastructure in place and accepted by the owner, 12 months of workmanship we guarantee. Okay, so that's in general what the bond does. And what the bond does, ultimately, it protects the taxpayer. The school board is a taxpayer-based fund system. If the school board is going to issue a contract to any contractor out there for hundreds of thousands or millions of dollars, the public needs to know that that contractor has been vetted out and will use those funds responsibly to build that infrastructure on time and pay everyone accordingly. So we're providing a financial guarantee on a construction contract. Performance bond is not an insurance product. It's simply a financial guarantee. If the contractor for some reason cannot finish the work or cannot successfully pay the vendors or suppliers, the surety, the bonding company, will give the contractor an opportunity to remedy, to fix it. However, if the contractor is unable to, the bonding company which could be Travelers, Hartford, CNA, Liberty Mutual. You know, we represent over 80 bonding companies. Whichever bonding company we have the contractor qualified with, that surety will come in and remedy. That surety will come in and pay to finish the job and pay the suppliers, et cetera. In essence, protecting the school board and protecting the taxpayer. Okay, so that's in general what a performance and payment bond will do. Now, how do I qualify for bonding, Sean? What do I have to do to get a bond? Well, in this format today, I know we're speaking to a lot of newer, smaller contractors, perhaps never been bonded before or limited bonding experience. So this is going to be a very basic, generic discussion on getting pre-qualified for surety credit. Now, the first thing a contractor should do, whether you're a large contractor or a small subcontractor, the first thing the owner should do is check the personal credit scores. The bonding company will start number one with the personal credit scores of the owners. If you're an electrician and you own 10% stock in that electrical subcontractor company or more, owners of 10% ownership or more, everyone's going to have to be vetted out, and they're going to take a look at your personal credit score and your spouse's personal credit score. We recommend freecreditreport.com or freecreditscore.com, and you're entitled to one free credit report, one free credit score per year. And the personal credit score ranges from 0 to 850. The bonding companies like to see the owners have a personal credit score of 650 or higher. And if you're married, you and your spouse, they want to see an average of 650 or higher. So the first thing I recommend, make sure your personal credit report and personal credit score is solid. Make sure you don't have any derogatory information on your personal credit report, tax liens, judgments, any type of unpaid debt. Get those things cleared up before you apply for surety credit, because that's the first thing they look at. And contractors who have strong personal credit scores can get qualified much easier. Okay. So that's the personal credit we talk about. Also, the things that we can do for contractors to get you started with bonding. You know, we have in-house credit programs and fast track credit programs. We've attached in the system today our express application, where contractors can get pre-qualified for surety credit up to $500,000 on bonds simply by checking your personal credit. You can fill out the application, your name, address, social, basic information, jobs you've completed. Owners and spouses have to sign it. They check the personal credit. If you can show a credit score 650 or higher, you're automatically pre-qualified for performance and payment bonds up to $500,000, which is pretty good. The surety will charge you a 3% flat rate based on your contract amount for bonds up to $500,000. Now, the express credit programs can be limited. Those type of jobs cannot be involved any type of hazardous material, any type of marine construction on the water, or any type of multi-year contracts. You know, just vanilla sticks and bricks type construction are what the fast track programs are geared for. So if you're just doing regular commercial construction, school board work, you'll have no trouble qualifying as long as you're okay. We do encourage contractors to start with the express program, get pre-qualified for bonds up to $500,000. We'll give you a letter of bondability showing that you're bondable, and you can start there. Now, if you're going to need credit for bonds between $500,000 and $1 million, or $1 million to $1.5 million, then they're going to require a little more information. Okay, and we'll talk about additional things that you can provide to stretch and increase your bonding capacity. Number one is going to be resumes of all your key personnel. We like to see who you worked with in the past, what size contracts you managed in the past. Perhaps you started your own company and you're new and have a new company. Well, who did you work with before? What's your experience there? Okay, let's lay that out for the owners and the key personnel. We want to show the bonding company that you have qualified personnel working for you, so we help explain your overall experience and what you're capable of doing. So Also, letters of recommendation. If you've been in the construction industry for some time, whether it's with your new company or someone you worked with prior, letters of recommendation from prior owners, subcontractors, vendors, suppliers, etc. Anyone who knows you in the construction professional world, have them provide a letter of recommendation. Those help immensely. Also, if you're a small contractor, you might not have a corporate financial statement yet, but you probably have a tax return. So we'd like to see your most recent corporate and personal tax return. Don't worry so much about the revenue and the numbers, but we'd like to see at least some sort of
So Sean, good morning. This is Sharice. If I can jump in here. So we're losing you when you turn to your left a little bit.
apologies.
So I just wanted to share that with you. No worries. Great
Thank you.
information. Thank you so much.
Very good. So resumes are critical. We want to make sure we have resumes on all key personnel. Also, the owners can provide a personal financial statement. Before you invest with a CPA and a corporate financial statement, you can provide a personal financial statement. The bonding companies want to see the contractors are not leveraged. So a personal financial statement once per year to make sure they can monitor your credit scores. That's important. Also, make sure as a contractor that you're using a good construction accounting software, whether using QuickBooks, Master Builder, Sage. Talk to your accountant, talk to your CPA. We have people we can recommend. We have to make sure that as a contractor, you're doing proper job costing, making sure that certain costs for your projects are allocated correctly for accounting purposes. Therefore, the CPA or accountant can prepare a work in progress report, making sure you can produce a quality in-house balance sheet and profit loss report. Contractors who have a solid internal controls, who have a good internal accounting system, who can show us the revenues and the profitability, those contractors are always going to secure better bonding terms. Okay. And then now, if you're a new contractor and you've been in business less than 2 years, you may have challenges obtaining surety credit. Some of the fast track programs are designed for contractors that have been in business for at least a year or two. So if you're brand new, you may want to go out and do some non-bonded work for the first couple of years, or at least the first year, and then apply for surety credit. The only caveat with that is if you have a new company, but you can show a strong cash position, perhaps you have a bank line of credit, you already have a good internal financial statement, you have good resumes, a business plan. If you're well polished as a new organization, then we do have underwriters that will work with us to provide credit. But you could expect some headwind or some challenges if you're trying to obtain surety credit as a contractor who just got your federal ID number, 2 weeks ago. So be prepared for that. Okay. Once a contractor's been in business for a year or two and show some profitability, you have some jobs under your belt, you have some success, and you can produce a good in-house financial statement, at some point we'll recommend you'll have to engage with a good construction CPA. We have folks we can recommend. Once the contractor invests in a corporate financial statement and we can see the equity is strong and the balance sheet is strong, good cash position, and the contractor's making money and we have a good solid financial, that will give us more leverage with the surety. That will allow us to grow your capacity, secure larger single bonds, and also negotiate a lower bond rate. Okay. So the idea is for smaller contractors to get your foot in the door using our in-house credit program or our fast track program based on personal credit scores, get you up and running. And then as you grow and get better and you outgrow the fast track program, you engage with the CPA, do a financial statement, and then you're off and running to a larger bonding capacity. Okay. Now, that's the talk about the rates real quick. Like I mentioned, under the fast track program, bonds 0 to $500,000, it's a standard 3% flat rate. So whatever your contract amount is times 3%, that's what the surety will invoice for your performance and payment bond. There's no setup fees. There's no charge for bid bonds either. The only time we'll ever actually invoice is when we issue the performance and payment bond. Okay. If you need a bond between $500,000 and $1 million, that rate will drop down to 2.5% flat based on your contract amount. And if you need a bond between $1 million and $1.5 million, that rate will drop down to 2% flat. Okay, and those are the fast track rates. And then if and when a contractor invests in a corporate financial statement, then we can typically work to get that bond rate down about 2% or less. Okay, so that just gives you an idea where the rating falls. So that's a general 101 on bonding. Remember, a bonding is not an insurance product. We basically take a look at a contractor's experience, his personnel, what the overall group is capable of performing in terms of experience. And we also look at the financials, which can include in-house financial statements, personal financial statements, tax returns, also corporate bank statements and personal bank statements they may ask for from time to time. And then eventually, once a contractor has a corporate financial statement, that'll give them more leverage with the surety, and they can approach their bank about establishing a bank line of credit. Long term, the surety would like to see contractors secure a bank line of credit, especially for mechanical, electrical, plumbers, drywallers, concrete. You know, the subcontractors who really have to finance the first portion of the job. If you're working on a public project, you might not get paid for 90 days, no 120 days. That's just how it is. The money's there in the public sector. That's the good news. Sometimes it takes a little time to get paid. You can lean on your bank line of credit short term while you're waiting for that receivable to come in. So having a bank line of credit is another one of those crucial pieces to growing your bond program for larger bonds down the road, okay? And that kind of wraps up the bonding 101 section here. And then now we're going to move on to insurance. Insurance is a different animal. While bonding is based on experience and financial statements, your insurance is going to be based on the type of contractor you are, the amount of revenue you're performing, your total payroll, how much payroll you have out there, and also your experience, what kind of claims you have. So before you apply for insurance, maybe you already have your insurance in place, maybe you don't, whatever your situation is, before you apply for your next insurance product, don't just fill out the application and hope you're going to get a good rate. There's a whole bunch of things the contractor can be doing to better position yourself with the insurance carriers so that when you apply for your insurance, the insurance carriers will see that you're well prepared and well qualified. One of the first things a contractor can do is to prepare themselves for the insurance qualification is a formal job site and fleet safety manual. It's not just job site safety, but it's your auto and fleet safety as well. We can send you samples of these things. What you're doing is you are spelling out all of the safety protocol, height exposures, fall safety protocol, OSHA safety protocol, all the things that a contractor is doing to keep their employees safe at the job site. We have safety consultants we can recommend. They can come in and review an entire safety booklet, but you want a formal written safety booklet that includes auto fleet safety, driver safety, vehicle use, distracted driving, et cetera, so that when the insurance underwriters look at that contract and they say, wow, look at this safety manual. This is very detailed. These guys are serious about safety, and you're off to a good start with your negotiating insurance terms. Also, contractors, please take a look at your website, right? The first thing that the general liability insurance underwriter will do will look at your website. Now, if you're an electrician and you're performing commercial work on commercial buildings, please don't have on your website that you do residential work in condos. If you have on your website that you do condominiums or high-rise towers or single-family homes or any type of residential exposure, it's going to make it harder for you to get insurance. Now, if you are truly a residential contractor, it's harder for you to get insurance. It's just more of a litigious arena, and it's different from the commercial sector. So Also, if you don't paint bridges, don't put on there that you paint bridges. Just narrow it down. Only have on your website exactly what you do, because the insurance underwriters will decline you or refuse to offer a quote if they see that you have some sort of hazardous activity listed on your website. Okay. And sometimes you only get one shot. And once they say no, you can't go back and change your website after. Okay. That's important. Now, if you're a GC and you are subbing out work, you want to make sure you have a good subcontractor agreement. And if you're a subcontractor and you're subbing out work, you want to make sure you have a good subcontractor agreement. The general liability insurance carriers want to see that you have a proper subcontract agreement with proper hold harmless language and indemnification language and insurance requirements that subcontractor should be providing. You should be properly passing downstream liability to your subcontractors via a proper subcontract language. It needs to be prepared by proper legal counsel. We have folks we can recommend. The statutes in Florida are always changing. So your subcontract agreement should be reviewed annually and updated annually. Okay, so a good subcontract agreement will help you negotiate terms with a general liability carrier. Also, quality control. You should put together a formal quality control program. If you're an electrician or an air conditioning contractor and you're installing infrastructure, you want to make sure you have a formal process when that equipment or material arrives, it's being inspected, when it's being installed, there's being photographs are taken, any type of installation where there's a signature required. You want to document your work all the way through to show that you performed your work correctly. So later on, if someone tries to say that you installed something correctly, you did something wrong, we all have ammunition to fight back against that. So if you have a good quality control program, that's another arsenal, another bullet in your belt that helps us negotiate terms with the general liability carrier. Also, workers' comp. If you have an injured worker, injured employee, you should, all subcontractors and contractors should have a formal light duty return to work program. Okay. The idea is if you have an injured employee, a small injury, maybe they sprained their ankle, maybe they hurt their wrist, something where they're not in a hospital bed. You want to try to get that injured worker back to work within 7 business days. That's the key number. If they're sitting at home collecting wages and paying their doctor bills, it's going to cause your experience mod rating, your EMR, to jump up, and it's going to have an adverse effect on your workers' compensation rates. So you should have a formal light duty return to work program, get the injured worker back in the office doing something, light duty, anything you can, so that they're not staying at home. If the workers' compensation carrier is paying the medical bills, that's one thing. But if we're also paying lost wages, that's where it really hurts us. So we have samples we can give you on a formal return to work program. Also, on your work comp, if you have a formal written safety booklet, you'll get a 2% safety credit. And if you have a formal drug-free program, that can save you 5% on your work comp. A formal drug-free program, we have safety consultants we can recommend. You can check www.questdiagnostics.com. There's a whole bunch of labs out there. You have to set up a formal relationship and a formal program with them. I think the setup fees are very minimum. Once you can show you have a formal drug-free program in place, that'll save you 5% off your work comp every year. Also, if an insurance carrier is considering quoting your account, writing your general liability, writing your work comp, they may want to come out and visit with you first in what's known as a loss control visit. If your insurance agent tells you, hey, look, Mr. Contractor, the insurance carrier wants to come out and see you to decide if they want to write you. Those loss control visits are extremely important. Take them very seriously. Be thankful and appreciative that these companies are going to come out and send a rep to visit with you, give you an opportunity to show the insurance carriers who you are, how you operate, your safety protocol, all the things that make you a good contractor, why they should write you. So those are loss control visits. Take advantage of them when they're presented to you. Now, the insurance carriers want to see you do a few things. One, they want to see you keep your claims, minimize your claims. There's always going to be insurance claims. In construction, people always get hurt. You know, general liability claims are going to happen. But if you have a lot of claims all the time, a high frequency of claims, eventually they're going to non-renew you. First, they'll increase your rates, but later they'll non-renew you. So if you don't have any claims, then suddenly, boom, you have one big claim, they'd rather see that. They'd rather see one severe claim versus many small claims. That's called frequency versus severity. So keep that in mind. Try to minimize your claims the best you can. Also, I know this may sound very mundane, but pay your insurance premiums on time. If a contractor who continuously pay their insurance premiums late, eventually the insurance carrier will non-renew. So I know it's very basic. Pay the premiums on time. Keep your claims to a minimum. And also, once your insurance policy expires and it renews, they have to do an insurance audit. Now, your insurance premium will be based on anticipated payrolls or anticipated gross sales. But once the policy period ends, they'll ask you, hey, what were your actual sales or actual payroll? And they'll compare the two. And if we told them, well, we thought we were going to do 1 million in sales, but you did 2 million in sales, well, there's additional premium due at the end. Or if they say, well, we thought we were going to have 500,000 in payroll, but we had 1 million in payroll, there's premium due at the end. And vice versa. If it's less than you expect, some of the carriers will offer a credit. So when you're giving your insurance agent your anticipated payrolls and or sales payrolls, revenue payroll, try to get it as close as you can. Your payroll estimates and your sales estimates should be pretty close. So the idea with insurance, guys, is try to minimize your claims. Be prepared. Understand your insurance agent's going to need a lot of information before they submit your file. If you don't have a job site safety manual, a vehicle use booklet, if your website's not correct, if you don't have a quality control program, if you don't have a return to work program, other contractors out there do. So you want to make sure you have those components in place before you apply for insurance. That way you can get the best deductibles, best rates, best overall coverage. Okay. Now insurance, the insurance markets right now are relatively soft. Auto insurance premiums have been up the past few years. Umbrella costs have been up due to some claims. However, you know, general liability and work comp and property and so forth, so those are relatively easy markets right now. But if you need a commercial umbrella product right now, the pricing is high and it's expensive to have vehicles on the road in South Florida. There's so much distracted driving out there. There's no silver bullet in trying to keep auto costs low, other than check your drivers, make sure your drivers don't have any moving violations. Watch out for the young drivers out there, anyone under 21, or any older drivers, anyone over 70. Those type of drivers can be precluded and or cause higher rates. Try to minimize your fleet. If you don't have to have 10 vans out there, don't have 10 vans out there. Sometimes contractors have more liability on the road than they do at the job site. But it's always a moving target. You always want to try to get qualified with a standard insurance carrier like a Travelers, a Hartford, CNA, Liberty Mutual, Amerisure, FCCI, etc. If you're a very specialized trade, if you're a glazer, you're a painter, a roofer, difficult trades, envelope of the building where there's leaks and so forth, those contractors typically have to go maybe not qualify with the standard markets. They have to go with the surplus line insurance carriers where the rates and terms aren't as favorable. But try to work with an insurance agent who's a construction specialist. You know, if I'm a contractor, I wouldn't work with an insurance agent who writes retail or manufacturing or condominiums or property. You want to find an insurance agent who just writes construction. And trust me, there's a lot of them out there, okay? So those are some of the things you want to focus on insurance. I think that pretty much covers all my major points with bonding insurance. I know I'm sure I missed a few things, but I know we're going to open it up for questions. So I'm going to steer this back to Nianthan and/or Cesare.
Okay, wonderful. Thank you so much, Sean. I'm going to jump in here because I see that the Director of Diversity Business Practices for the school district, Ms. Vicki Sykes, has joined us. So I wanted to see if she wants to share a few words this morning before we open up for questions.
Thank you so much, and sorry that I'm late. I had a meeting this morning that conflicted with this because I really wanted to attend from the very beginning. So thank you so much for offering this type of workshop. You know, I tell everyone all the time, small business growth, understanding these type of processes, these type of requirements, the operation side of the business is where so many small businesses fall down. They know their craft. They can paint, they can do plumbing, they can do HVAC, they can do electrical, but it's these operational processes, these requirements is where they fundamentally have these hiccups and these challenges. So having a partner like Lego and working together to help our small business community grow, I tell you, it's worth its weight in gold, because 90% of businesses in Florida, by the way, how many people know, how many businesses you think in Florida, in the state of Florida, are small, according to the SBA? How many you think are considered small businesses? Over 90% are small businesses. So to be able to help these businesses grow and thrive, they are the parents, the grandparents, the aunts, the uncles, the cousins of our students. So the better that they do economically, the better our children grow and thrive and survive. So thank you once again. I hope everyone here is learning and growing, and ask lots of questions. There's no intimidating question. Don't be shy. Don't think, oh, this question is stupid, I'll feel bad from asking it. Ask all the questions you want, because this is why we have these type of forums, so that you can truly understand how you can grow your business and how important bonding and insurance requirements are. So thank you again for allowing me to speak. I really appreciate it. Everyone stay safe and well.
Thank you, Director Vicki Sykes. She is the Director for Diversity in Business Practices for the school district. Thank you so much for your comments. So once again, before we go to questions, I want to allow the project manager, Gerald Rodriguez with Lego Construction, to introduce himself, because one of the benefits of having such a workshop is understanding who are the players and all of the decision makers. So you just heard from Director Sykes, you heard from Maricel earlier, you heard from Sean, because we all know it's about relationships. So I wanted to have Gerald also share some information about Lego. Go ahead, Gerald.
Hey, thank you, Trace. Thank you guys for participating in this event. Thank you, Sean and Sharice, for coordinating this in the school district of Palm Beach. As always, it's an honor, and we hope to continue doing some more events for the minority subs, and anything we could help out with, we'll be more than happy to do it. Well, just pretty much like Nianthan said, we have some few projects coming up. Just be on the lookout for those so you guys can participate, give us some good pricing, and hopefully we could continue to work together on future projects. Thank you, guys.
Wonderful. Thank you so much. So right now we will open it up to questions. I just want to remind everyone, this presentation will be emailed to you after the meeting. And we will also send the link to the actual recording. So that way, if you want to look at it offline, you can really process it, because it was a lot of wonderful information. So right now we'll open it up to any questions or comments from the attendees. I see we have some questions on the screen. Let's go ahead and answer those briefly to kind of give people some ideas of which direction or any direction they want to go through for this workshop. Who wants to take a stab at the first process? How long does the process take? Who wants to answer that for me real quickly? How much lead time should you plan for in terms of bonding or insurance?
Okay, bonding, if you're going to use the fast track program, we can have contractors pre-qualified for surety credit within 2 business days, sometimes quicker. All they're really looking at are the personal credit scores of the owner. So if the personal credit scores are solid, once we get the signed application, we send it to the surety. They usually respond by the next day. They don't tell us what's on the credit report. They just tell us if you qualified or not. Once we know you qualified, you've got your letter of bondability, you know you're bondable, we'll send you a bond request form. Anytime you want to bid a job, a bid bond, we'll fill out one form, bid bond request, send it over to us, and we'll issue the bid bond. And or if you have a contract that needs a performance and payment bond, you'll just send us a copy of the contract along with a bond request form, and we'll have the bond issued usually within 1 day. So it's a very quick process if you're going to use the fast track program. Now, if you're going to invest in a financial statement and put together a more detailed bond kit, that can take a little more time. But once we receive the underwriting information, it's only going to take us a few business days to set up the line of credit, the bond line of credit. It doesn't take long. Now, on the insurance side, we take a look at when their current insurance policy is going to renew. Let's say, for example, the contract, all of their policies will expire on May 1st, okay? I would want to start working with that contractor 120 days before that. So whenever their policy expires, we need to start working on that 120 days out, because we have to take a look at their safety program, all of their loss runs. We've got to do insurance applications, all those things we got to put together. That can take some time. That can take months, really. So it depends on your renewal date. Figure at least 120 days before your policy expires.
Excellent. So next question we have on the screen. Now remember, just type your questions in the chat and we'll be happy to share it with our panelists. Is there an appeal process? How long is the appeal process? What do you expect in the appeal process? Mr. Sean.
Okay. So on the bond side, if a bonding company declines to offer surety credit, they can decline it for one of many reasons. If it's because of personal credit scores were not sufficient, the surety will issue a letter acknowledging that they declined to offer credit based on information they found at this specific credit reporting service, whether it's Experian.com, etc. And they'll advise the contractor that they'll have to inquire with that credit reporting agency to see why it was declined. And typically the contractor will know that there was something on that personal credit report that caused the declination. Now, if you can go back, get the personal credit report cleaned up, get the score improved, we can go back and apply after that, okay? Now, if they were declined for other reasons, maybe the corporate financial statements were not strong enough, maybe the bond they need was larger than what they can qualify for, maybe they didn't have a bank line of credit. There's all types of reasons why a surety might decline a bond, and they'll specify exactly why. And then the bond agent can work with the contractor to remedy those specific issues before they apply for credit again. However, said that, a good bond agent will always make sure everything looks good before it goes to the bonding company. The good bond agent will always advise the contractor, these are the things look good, these are the reasons why we should qualify. However, these are some underwriting challenges we may have, and be prepared for some pushback on these issues. And we try to make the presentation be as best as we can before we send it to the surety. If they decline it, they'll tell us why it's declined, and then we can work to remedy those issues. Okay, so there's always a way to, and we have over 80 bonding companies. So if 1 or 2 bonding companies say no, we can reshuffle the deck and improve our position and go somewhere else.
Understood. I just want to remind everyone, you can put your question or comment in the chat, or you can also raise your hand by hitting the reaction button and raise hand. Either way, we will entertain any questions or comments. So I don't see any questions or comments in the chat. So we have another question. When should you apply for a bond?
Good question. Always don't sign the contract before you know you can get the bond, okay? Apply for surety credit. Make sure you can get bonding before you negotiate a contract that requires a bond. You might have to walk away from that contract. Make sure you know how much bonding you qualify for before you go out there and start signing contracts that require bonds. I recommend once your company's been in business for at least a year or 2 years and you think you're going to need surety credit, go ahead and get pre-qualified. If your company's been around for a while and never been bonded before, go ahead and get pre-qualified. There's no setup fees. You might as well know what your bonding capacity is. So the answer to that question is before you sign a contract or once you've been in business for 12 months to 2 years, that's a good time to apply for bonding.
Okay, so another question. At what level is a bond not required? Because you talked about if you've been in business a couple of years or a few months, you may not qualify. So what is the dollar value where you can go out and get some experience under a certain cap so that you can build your business collateral capability, reputation to apply for a bond? What is that dollar value?
It's a great question. You know, contractors who work in the private sector, you know, if you're an electrician or a plumber or roofer, you might work for a general contractor on a privately funded job, and there may not be any bonding requirements there. So if a contractor can go out and build their experience on non-bonded jobs, the bonding company will look at that favorably in terms of experience moving forward. So you can go out there as an electrician, maybe land $1 million job if you know the right GC or get in with the right owner. If you can build your experience on the non-bonded side, you could do jobs. There's no limit on what you can do. Now on the public sector, typically what we see is jobs under 250,000 or under 200,000. A lot of times don't require bonds. Okay, so that's the smaller job. So maybe you go out and land a job for 50,000, maybe 100, 150,000, get a few of those under your belt, and then suddenly you're ready to go after some bonded jobs, maybe in the $300,000 to $500,000 range, that kind of thing.
Wonderful, thank you, thank you. So I'm checking the chat and I don't see any hands raised. I'm going to pause for a moment just in case somebody's trying to unmute. I would just say that the session has been so thorough that people are just ready to apply. So I just want to ask the representatives from the school district, where does someone go for certification with the school district? Maybe they are new to the district and want some more information. I know I do have a link to your actual diversity and business practices website, but where would they start if they wanted to build their relationship with the school district in Palm Beach County? And I know that you have a lot of outreach events, but you also have a process where if they bid, they can request a meeting to review the particulars. So where would they start? Who would be the first person they would call, Director Sykes?
To certify with the school district?
Yes, ma'am.
Well, on our website, we try to make it really very simple, because we know that if you have to perform more than 3 or 4 clicks, people are gone. So as soon as you get to our website, you can say, if you want to certify with us, it says certify with the school district. So you click, because everything is electronic today. So our certification process is through B2G, our database. So you can start there to certify. If you don't really are not that tech savvy, or you don't understand the process, Nicholas Tarago is our certification analyst, and I see Maricel just put up his number. You can call him directly and he can walk you through that process. If you want to set up a meet and greet with the school district, because I've been certified for a while, but I want to meet directly with the end user who would utilize my good or service, then you can complete that form and we can set up a customized meet and greet between the vendor and the actual end user who would use your product. Or for most of the architects and construction, they meet with Dave Dolan, the chief of facilities, They meet with him and all of the SBAs. So we customize our meet and greet, and it says right on the website, request a meet and greet. Very simple, request a bid debrief. So everything happens on our website, and it also lists the entire team, our email addresses, and our phone numbers. So if you're confused about anything, never, ever hesitate to reach out and touch. It's like Diana Ross, reach out and touch somebody's hand. We're here for you.
Wonderful, wonderful. Thank you so much. So at this time, I guess since we don't have any other questions in the chat or hands raised, we're going to close out. We'll have Nathan give us our closing remarks. Once again, he is an estimator with Lego Construction. Go ahead and give us our closing remarks. And thank you so much, everyone. We'll send out this information after the meeting.
Ms. Chester, let me just say that this was an excellent, the part I saw, this was a so well done and excellent event. Thank you for all you do.
Thank you so much. Thank you for allowing us to partner with the school district.
Thank you, Mr. Sykes. Thanks, Cherise, for organizing the event, and thanks for all the participants and all the subcontractors who take the time on the busy Tuesday morning to come out here for the meeting and address the notes. Yes, we would like to help whoever would like to have any request, any information regarding the projects related to Lego with the school district, or like anything related to the bonding and insurance. We are here to help you out, and always we are on time, or like we are available on call, and you could have the details, our contact numbers, our email ID, so you can contact us, or you can reach Mr. Sean on getting started with your bonding process. We have given their information, so please feel free to do so, and we appreciate your questions. Thanks a lot. Have a good day.